Welcome to the Gold Newsletter Podcast, your bank of knowledge of investment, economics, and geopolitics. Go to goldnewsletter.com for our publications and archives.
This is the Gold Newsletter Podcast. Fergus Hodgson, your host, joined by Brian London. We're so delighted to be speaking with you again this week. If you want to get more on mining metals, the broader economy, please do consider subscribing on whatever platform you may be on. We have a guest all the way from England, Dominic Frisby, financial writer, film producer, and he is a weekly columnist with Money Week. So that he can cover all sorts of topics. But since this is the Gold Newsletter Podcast, we will seek to start with getting his take or why he is not so on board with it, right? He's not so excited about gold, and maybe give us some pushback that we don't necessarily get on the show. So Dominic, welcome, and please share your hesitancy. What are your concerns?
Well, thank you very much, Fergus and Brian, and it's a pleasure to be on your show. And, you know, if any of your viewers know me, they'll know that I've been in the gold space since the 2000s. And I've written books about gold, and I've written, you know, huge arguments. I've argued for decades now that if we are to fix the world and make the world a better place, we need sound money. And obviously gold is sound money, and it's been money for 5,000 years. In fact, people say gold has been money for 5,000 years. It's actually been money for about 45,000 years. Gold was the very first metal that man used. He was using gold long before he discovered smelting, long before the Bronze Age, where, you know, he smelted tin and copper. Long before civilization, man was using gold as money, because he would find little nuggets in riverbeds as he hunted and gathered. And obviously it was more abundant in riverbeds in those days than it is now, because all the easy stuff has been found. And then he would either adorn himself with it, or these bits of gold will be given as rewards to other people for great deeds, as prizes in exchange, in barter, and so on. So these are all, you know, purposes of money. So gold has been money since, you know, since human beings basically existed. I was about to say before human beings, but that's a slight exaggeration. And it's the very first metal we used. And the reason I'm ambivalent about gold at the moment, this is an argument that it's now really common among Bitcoiners, but I was the person who came up with this argument, is that the horse was transport for thousands of years until we discovered the car. And then once the car came along, you know, the horse, which was natural transport, if you like, became a sort of luxury item, almost a liability. And there are parallels with gold and money since Bitcoin's come along. And I'm very pro Bitcoin, but let me explain my ambivalence towards gold and what bizarrely, ironically, might save gold. Over the last 20, 30 years, all the physical economy has grown at, like, you know, 2, 3, 4%, whatever. It's done okay. But what has really grown is the digital economy, the intangible economy. And whereas once upon a time, value was in physical stuff, now all the value is in intangible, whether it's shares in Tesla or actually Tesla's not a good example, shares in Google or Facebook or the FANGs, or intellectual property, trademarks, digital currencies. And it's the digital economy that's grown so incredibly. And the reason that the digital economy has grown is scalability. If I let's just say I invent, you know, the best pen. I invented the best pen in all human history, and everyone wants this pen. I've still got to manufacture this pen in factories all around the world and distribute it. Whereas if I invent, you know, the best app in the world, I can upload it to the App Store and 1 billion people can download it. So you get a much, much quicker return on your investment because of this scalability of digital. If you compare, you know, Brian, you'll probably remember this. In the old days when you were courting a girl, you would send her a mixtape. you would send her a cassette of all your favorite songs, or that's what we did in the UK anyway. Now, if I want to record from my favorite records to a cassette, and then I want to make 3 copies of that cassette, I would have needed 3 cassette recorders, or I would have needed to redo it 3 times. Well, obviously, with digital, you can just copy and paste. And that's a reflection of this huge scalability of digital. And that's why the digital economy's done so incredibly well, in my opinion. It has a scalability that the physical economy doesn't have. So with that backdrop, I look at gold, and gold is permanent. All the gold that's ever been mined still exists. You can smash gold up into a thing that's just 1 atom thick, a paper thin, 1 atom thick thing, but you cannot destroy it. It is permanent. Gold is the single most analog asset there is in the world, if you see what I mean. And yet, all the growth is digital. What is the purpose of an analog asset in this digital world? You know, if we conquer space, we're not going to be sending gold to each other from Mars to Jupiter or whatever it is, but we will be sending bitcoins or some digital equivalent. And so that's why I'm hesitant about gold. Now, here's the one thing that, bizarrely, ironically, to gold bugs who are essentially libertarian in their mindset, here's the one thing I think could actually save gold. And that is, you know, it's obvious we're on this relentless debasement of money that's been going on for 100 years, since 1914, when the European nations came off the gold standard, and then since 1971 that the States did. And we just see this incremental debasement of currency that's accelerating every year. And, you know, currency's losing, 10% of its purchasing power every year. It buys you 10% less house, 10% less stocks. You know, there's this relentless debasement of currency. And it could just carry on losing 5-10% every year, or it might accelerate and we get the hyperinflationary scenario. I've been waiting for currencies to collapse for 10 years, 15 years now, and it hasn't happened. So I wonder if it's just this sort of relentless drip, drip, drip. And so we're going to have to go at some point to some kind of hard money to stabilize everything. And if governments don't own Bitcoin, with a couple of exceptions, they do own gold. And faced with a choice between gold and Bitcoin, bizarrely, it might be governments that put us back onto a hard money standard, with the gold backing their fiat money with the gold that they have. China, I've done calculations, has got at least 10 times more gold than it says it does. It's got gold holdings comparable to the United States. We've got this first China CBDC coming out, I gather, in time for the Olympics. What if China decided to back its CBDC with gold? It's got the gold to do it. It would be a statement of war to the United States, in effect, because it basically says our money's good and your money's rubbish. But, you know, little things like that. It's bizarrely, it's government action that can get gold revalued upwards to a proper fair valuation. Because we all know gold should be $5,000-$10,000. And if US gold hold, if the US was to pay off its national debt with its gold as it could have done in 1980, it's, you know, the value of an ounce of gold is $50,000 or $100,000 or something. Anyway, so you get my ambivalence towards gold and the irony that what could save it. I say it's ironic because most gold bugs are libertarians, and it's government action that saves gold. Anyway, I'll hand the conversation back to you guys.
Yeah, a lot to unpack there. I'm still trying to get past the immediate association with me of someone being old enough to do mixtapes, which is accurate because I had somebody actually this morning send a copy of a mixtape out in a Facebook post that to people of my generation, that kids just don't realize what we went through to make a mixtape. You had to really like somebody if you gave them a mixtape. Yeah. But yeah, interesting arguments.
It was half a day's work.
Yeah, it really was. And if you screwed up, you know, there was no way to go back. You know, you had to do it in sequence. But a whole nother podcast could be dedicated to that. But lots of great thoughts there, Dominic. I think that you make some good points. I would say that one of the, you know, gold is analog and it is static, largely static in terms of quantity. It doesn't go away and is only increased incrementally. ironically, one of the attributes that's lauded over Bitcoin is it duplicates that, and that there's a limited supply, ultimately limited, and probably improves on that. But there's also the difference between money and currency. And as long as gold is money, there will always be currency. There are digital representations of money. And if we were on a gold standard, those digital representations would represent gold to some extent. And in paper, currency is an extension or a liquefaction or multiplication of gold because of the fractional banking and the like. And that's how paper currency developed. But what gold really is, and you alluded to this at the end of your argument there, gold is a governor on human nature. It is a restriction on human nature. It is a way to ensure against the inevitability that governments and people are just going to go crazy and take on more debt than they can handle and therefore depreciate the currency. That's the thing that really isn't new. That's the thing that's been going on for thousands of years. In every civilization in human history, the governments eventually, through military campaigns and entitlements, Rome is a shining example, but there are many others, they've overspent their means and they had to debase the currency. In a gold standard, they either put copper into the gold coins or they clip the edges or whatever. So it always happens. And it could still happen even under a gold standard. You would just have to devalue the dollar, as FDR did, by some 69% by changing the price of gold and revaluing it upwards. So all of that is a long way of saying, I agree with your ultimate end game here, or potential ultimate end game. Nobody knows what's going to happen, but one way for governments to really screw things up, but then instantly press the button and regain credibility is to attach their currencies back to gold. And if the U.S. government did that, they could solve this debt issue, solve everything by simply revaluing gold to whatever would equate to a 20 to 30% backing of the money supply, which is $10,000 to $20,000 an ounce at the current rate, which would create a lot of issues it would create some issues in the supply chain and markets, et cetera. But because gold really isn't used industrially to any great degree, it's the one thing they could do that wouldn't have really a lot of disruptions in the economy. Make a lot of jewelers much more rich overnight, but other than that, they'll be melting down all the jewelry in their cases and recasting them. But other than that, it is the lifeline that they could use.
Brian, there's an economist called Thomas Paterson who did a study of the gold standard in the 19th century in the UK, and in times of, people forget that the UK came off the gold standard during the Napoleonic Wars to pay for the Napoleonic Wars. And we went back on the gold standard, and I think it was 1816. We had what's called the Great Recoinage. And then, obviously, over the course from 1816 to 1914, consumer prices fell dramatically over that period. But the pound was only ever, in reality, even though the gold sovereign, that was the old pound coin.
St. George slaying the dragon.
Yeah, there you go. And in fact, when we were we did what Americans did in the Napoleonic Wars, where we gave America's allies, we kept funding them with gold to pay them on not America, Napoleon's enemies. We kept sending them gold to fund them to fight Napoleon. And we exhausted all our gold supplies, and it was known as the Cavalry of St. George because it all had that thing on. So this was us meddling in foreign affairs in the late 1700s and early 1800s. But the point I was getting to is, over the course of the 19th century, when the UK was on a gold standard and money was sound, the pound was ever actually, in practice, only about 25% backed by gold. In times of monetary tightening, it went up to about 50%, and times when credit was really loose, it went as low as 10%. So even though we're purported to have been on a gold standard, it was only about 25%, which is the number that you just gave us, Brian.
The Gold Newsletter is proudly sponsored by Inventa Capital Corporation, a venture capital advisory firm dedicated to the acquisition and development of assets in the natural resource sector. Today, Inventa is one of the premier mining groups with a first-rate portfolio of companies and a world-class team.
This is the Inventa Mining Update, and I have Michael Conard with Vizsla Silver. The website is VIZSLA silvercorp.ca. We'll also get the URL up on the video version, and the tickers are VZLA in Canada and VIZSF on the over-the-counter. Now, Michael, what I intrigues me about the story is that obviously I'm a fan of Latin America. You've gone into a difficult place and brought together, let's say, many different properties into one. Do you want to explain how this Panuco project, which you're working on, came to be?
Yeah, absolutely. So Panuco essentially was discovered by someone by the name of Francisco de Ibarra. Francisco basically made his way to the coast in Sinaloa in the 1500s, and on the way he discovered the Durango Silver District, the Fresnillo Silver District, and was basically a witness to some of the the major districts in Mexico being discovered, in the mid 1500s. And the final place that he came and discovered was Panuco and Copala, and that's actually where he passed away. Was in the valleys of the river there, close to where we're drilling now. And I suspect that in time, Panuco has the potential at least to rank alongside those silver districts that I mentioned here. So since that time, since the troubadour passed away in the river of the valley of the district there, many different groups had ownership of the district, and many different groups were mining there. So if you were to fast forward to the last 50 years, these districts, specifically the Panuco and Copala district here that we have now 100% ownership of, were being operated by small families, and it was a scattering of concessions owned by various different people, and it certainly wasn't consolidated in the form that we have now. So what we did was actually purchase and acquire two halves of the district, and as well as make other smaller acquisitions in the district to entirely consolidate this district for the very first time. And I think that's important to note because it's not like other companies where we've optioned this from a major miner or a junior miner or an intermediate miner. No, this has come directly out of the hands of private individuals. And we were actually able to make those individuals shareholders in our purchase of the district and the concessions. So not only do we have now an entirely consolidated area to explore and apply modern techniques to, but we also have alignment and continuity essentially by having the previous vendors, the Mexican families, now shareholders of Vizsla.
Yeah, it's an exciting time for you guys because I've been looking through the details, and you've got over 9,000, almost 10,000 hectares, which is a substantial property, 14 kilometers or almost 10 miles for Americans in length. And it does excite me too because you're able to apply, as you said, the modern professional management and economies of scale, whereas in the past there was this piecemeal exploration, which wasn't really going anywhere. So, and you mentioned more than 20 veins. I mean, is that number changing over time?
Yeah, it's funny. It's growing as we explore, and so there's 20 main structures that we know about now. That number is probably going closer to 22, 23 now. But we actually are finding some of these minor structures like parallel veins and hanging walls, footwall veins to the main structures that we're drilling. So, we've said in the past that there's 80 kilometers of vein extent here. I think that'll grow and continue to grow quite substantially, to in excess of 100 kilometers in the near-term future here. So it's just the district is really ripe for discovery, and it's so clear. It's so funny that we were the only drill holes into the Napoleon vein which now will be the foundation to our resource. And of course, we have over 1.7 kilometers of continuous mineralization there. So just completely underexplored.
Yeah, do you want to give people a little bit of sense for the time frame, right? So why is now the time to buy or not? And what is the next likely release of information from your work?
Yeah, I think now is an incredible time to buy the stock, and unfortunately, I'm not able to because we're in a blackout with the resource coming up and drill results coming very aggressively. We have 10 drill rigs turning, so there's always new drill results. But otherwise, I would love to be buying the stock because I think it's it's completely undervalued here. We're looking at our initial resource coming out in Q1 of next year. That should be a major catalyst. But what we'll do with that resource is just demonstrate that there is a foundational amount of silver and gold here that we can take through next steps, including production. And what I really want to show is the potential of the district, the upside that exists in all the other exploration targets all around. So, there's a lot to love about the company, and I would be buying stock if I could be right now.
Right. So, folks, go to VIZSLA silvercorp.ca for more details. They had a press release out in November. Also, if you want to follow the tickers, VZLA on the TSX and VIZSF on the over-the-counter. So, otherwise, Michael, really glad to speak with you. I look forward to next time.
Well, thank you very much. I appreciate being on the show there.
Yeah, and there was that kind of fractional representation or backing in paper money as well. And gold was money. There was no difference between gold as currency or money. And interestingly, here in the States, we had a raging inflation in the 1850s because of the 49ers gold rush. All of a sudden, they found a lot of money in the ground. And they put that into the economy, so prices surged because there was a lot of gold discovered. Of course, now that would just be incremental unless technology really came about. And of course, if gold was valued at $10,000 or $20,000 an ounce, we'd find an awful lot more of it because a lot of mines would suddenly be economic at those grades. So it would be interesting what is going to happen. My view is I don't know what's going to happen with Bitcoin and cryptos. I don't know that anybody really knows. I certainly support the intent of cryptos in offering individuals some independence from governments and government money. But it remains to be seen if that's going to work. I think the governments are the biggest threat to the cryptos and Bitcoin in particular.
Brian, why do you think the digital representations of gold have not really taken hold as mediums of exchange, right? So we've had the technology for the last, 25 years to use gold, not physically, but with digitally, and it just hasn't really taken off, nor have cryptocurrencies as medium of exchange. But do you think that can still happen?
It could happen, but there's so many digital gold connections out there, and no one has really taken the fore. And there's no one that's become widely respected, has gotten the kind of market penetration. And then again, all it is it's still a trust factor there. So it's a very difficult bridge to cross when you have blockchain ledgers that establish extreme trust, but then you still have that weak link between the attachment of that to a physical metal.
And one of Dominic's points is important. Larry White, maybe the top economist of free banking, he notes that, as Dominic said, that even during these times that we maybe look to as these eras of fully backed currencies, the truth is they were actually only a minority backed. There was only fractional reserves. So maybe given the cost of storage, there'll have to be some sort of fractional system for gold to come in as a medium of exchange in the digital fashion or form. Okay. Dominic, any more thoughts on whether gold can or will compete in, let's say, a digitized form versus cryptocurrencies? Or do you just think that it'll become less relevant. You see, yeah.
Well, I was asked to participate in I was like, when Gold Money came out with their digital gold payment system in the noughties, I remember being really excited about that because I thought this was the future. And then, but I was looking back at the history of money, and you got the 3 or the 4 functions of money: store of value, medium of exchange, unit of account, and I can't remember what the other one is. What's the other one? I can't remember. But anyway,
store of value, was that the first thing?
Store of value, medium of exchange, unit of account.
That's the 3. They're just 3.
Then there's a 4th one. Anyway, it doesn't matter.
Okay.
But gold never really was medium of exchange, except for high value purchases. Right. That would fall to silver or copper or whatever. And, as soon as we with the invention of the printing press and we started using paper money, more gold was held in storage than previously with the invention of paper. And so I wonder, even with digital gold, if it will actually, I know in theory it can work, but I wonder if in practice it'll ever actually be a medium of exchange. I think gold's thing will always be store of value, unit of account, and display of wealth status. I've got my little gold, half an ounce of gold around my neck to remind everyone what sound money is.
Right. And I want to let you explain your film, which is coming out this weekend. So if we can move on from the gold bug discussion, which is seemingly, I guess the jury will be out what will happen over the next decade with cryptocurrencies, whether they will actually rise and compete with central banks. I mean, I hope so, of course, and whether gold will play a role there. But you have a film coming out, Father of the Fringe, about Adam Smith. So basically the father of modern or classical economics. And what brought this film to the fore? What's the origin of this one? Well,
this was, when I wear my other hat, I work as a comedian, and the World Cup for comedians is like the Edinburgh Festival. It's the biggest arts festival in the world. It happens every year in August. But outside of the bubble of the Edinburgh Festival, people don't realize just how big it is. And in fact, there's only one event that sells more tickets in the world, and that's the Olympic Games. And they're every 4 years. The Edinburgh Festival's every year. And the reason nobody really knows about the Edinburgh Festival is, if you think of the World Cup final or the Super Bowl or the Olympic 100 meters final, there's one big event that the whole world watches on the telly. Whereas with Edinburgh, there isn't. There's just hundreds and hundreds of tiny shows. There isn't one main centralized event. It's distributed. And so it's this huge festival. And I love going up there as a performer and as a punter. And I find the economics, I've always found the economics of this tiny festival really interesting. Now, it's the same in the States. The arts in the UK tend to be left of centre in their politics, big believers of the government's got to do this and the government's got to do that. And I was saying, okay, you say that, but why do people go to the Edinburgh Festival? Why do artists go to the Edinburgh Festival? They don't go there, to fight climate change or to feed the homeless or to help the hungry or whatever it is. They go there out of their own self-interest. They go there to get noticed, get discovered. They go there to make money. They go there to get better. They go there to have fun. But these are all self-interest. And the great Adam Smith quote, Adam Smith lived in Edinburgh, and the great Adam Smith quote, it is not from the benevolence of the brewer, the baker, or what's the third one? I can't remember what the third one is. Butcher, thank you. My memory's gone today. It's not from the benevolence of the brewer, the baker, or the butcher that we expect our dinner, but from their regard to their own self-interest. In other words, if the butcher or the baker or the brewer wants to thrive, he has to make the best, prepare the best meat or make the best bread or whatever it is. And as a result, he's going to earn more money. And but on the other hand, I get better food, meat, and drink. So it's this dynamic. So in acting in your own self-interest, the result is you make the world a better place because you do better things. And so this dynamic is very much at work in the economics of the Edinburgh Festival. And so I've made a film telling the history of the Edinburgh Festival and interpreting it through the prism of Adam Smith's economics. And the history of the Edinburgh Festival, libertarians will love this. So in 1947, as the world was recovering from the Second World War, this Austrian impresario called Rudolf Bing, who'd escaped the Nazis and come to the UK, had this idea that he wanted to put on this international festival to heal the wounds of war through the languages of the arts. And he raised 30 grand, 20 grand in subsidy, 10 grand off his mate, who was a rich guy who'd won the money on a horse. And he put on this festival, and it had like the Halle Orchestra, the Vienna Philharmonic Orchestra, the Glyndebourne Opera, Sadler's Wells Ballet, the Old Vic Theatre Company. So all this highbrow elitist stuff. And there was a couple of like grassroots Marxist theatre companies and a local puppeteer and a few other local acts. And they all said, oh, can we come and do the festival as well? And Bing said, no, you're not good enough. We're having all this highbrow stuff. And they said, oh, okay. And they just went and did their shows anyway. They just went and go, oh, I'll just hire a room in a pub and I'll do it in the room in the pub. That's fine. And they were known as the Uninvited Eight. And every year they were so successful that the following year, 9 acts came, a 12.5% increase on the previous year, only one more. And it just grew gradually year by year until by the early 70s, and they became known as the Fringe. But by the early 70s, the Fringe was bigger than the main festival. And it's remained bigger ever since. No subsidies, none of the stuff that the main festival had. Just all these artists going up there to have fun and get discovered and make money and so on. And so it's a real triumph of, free market, libertarian.
Spontaneous order. Yeah. Emergent order.
So again,
Spontaneous or emergent order.
Exactly. And the irony is that it's in the arts, which is loony left, So it's a film all about that. And you can watch it it premieres on Sunday night, but it'll be on YouTube after that. Adam Smith, Father of the Fringe.
And it's comedians primarily, or the acts?
Yeah. Well, it didn't used to be. It used to be theatre, but over time it's changed to comedy because, there's music, there's everything, but comedy is the biggest because comedy is the cheapest. You just need one man and a microphone.
Sure. And we'll have a link to that. Go to goldnewsletter.com/podcast. So we'll get that in the show notes. Man, now, so Father of the Fringe is your latest project. And I did see a short clip from you about platinum. Do you want to give people a little bit of spice before we let you go?
Sure. I just covered platinum. I cover platinum, every now and then, every few months. And you probably remember this back in the noughties. Platinum was double the gold price.
Yeah.
And historically, platinum's always been more expensive than gold. That's why platinum is, platinum album sales are better than gold album sales, and platinum credit cards are higher status than gold. Platinum's rarer than gold. But platinum's just fallen off a cliff over the last few years. And there's 3 reasons. Firstly, the Volkswagen diesel scandal. Platinum's biggest use is in catalytic converters for diesel engines. Yeah. And with the diesel scandal, there's just been less demand for diesel cars. So automotive platinum demand has decreased. As a result of the falling price, investment platinum demand has decreased. The money that previously was going into ETFs, platinum ETFs, is now going to Bitcoin or whatever. And then also, third big demand is platinum jewelry, and platinum's just not fashionable as it was. And so, but so I'm just making the argument, if you can pick up platinum for, below $900, I'm not saying it's going to go up tomorrow because I don't think it will, but it's just so cheap relative to, if it was to go back to its its historical average of being 1.25 times the gold price, it would be 2,200, 2,300 an ounce. It's like 950 an ounce at the moment. So I just think platinum around about $900 is a buy. Nobody cares about it, and that's usually the time to buy something. Buy when markets are boring. Jewelry demand will increase because fashions change. Investment demand will increase if the price starts rising. And, I don't see us necessarily using more diesel engines in the future. But if we go to this fuel cells, well, you need hydrogen you need platinum for hydrogen fuel cells. And so that potentially could increase industrial demand. So I think we're probably still a few years away from it. But long term, I think a little bit of platinum in your portfolio is I don't see how you can lose. I can't see any more than 10 or 20% downside, and I can see a potential triple on the upside.
The interesting thing to me on platinum and really all the PGMs, Dominic, is as much the supply side as the demand side, because there are severe supply restrictions. Most of the world's PGM supply comes from Russia and South Africa. And the South African mines are shutting down, and Russia's not the most stable places. So there's supply insecurity and supply restrictions. The other interesting thing is that palladium, which historically was priced about 1/4 to 1/3 the price of platinum, and thus was used as substitution for platinum in catalytic converters, and that usage increased. Now palladium's double the price of platinum, so it's completely flipped and more. And so now there will be some impetus or incentive to use platinum as a substitution for palladium in not diesel, but gasoline engines, if possible. And
earlier in the year, the palladium price was 3 times the platinum price.
Yeah, back a good bit. Yeah, come back a good bit just in the last few weeks, actually. So it is an interesting story. The big platinum miners are very bullish on the platinum price. Internal combustion engine growth is still growing, despite all of the buzz about electric vehicles. And there's still a desperate need for PGMs. That's why catalytic converters are stolen from underneath cars right and left. So that is an interesting story. Dominic, we really missed you at the New Orleans conference this year. I know you were dying and you were jumping through all kinds of hoops to come during COVID. And of course, the previous year we had you virtually.
Yeah, I mean, I was so desperate to come. I had a friend who used to write travel guidebooks, and he's been everywhere you can imagine in the world. And he just says New Orleans is the best place he's ever been to. I've just been desperate to come, and I tried everything, but I couldn't travel to US. Because you can't. I would have had to go to Mexico for 2 weeks because you can't go to the US. You can now, but previously I couldn't go to the US from the UK without doing 2 weeks somewhere else because stupid COVID restrictions.
Yeah, I know you jumped through a bunch of hoops to try and come, so we're desperate to get you here as well. It's an incredible, amazing experience, both the city and the event. So we hope to get you there this coming fall, and we'll be in touch with you for those details. But I think you'll absolutely love it, and our audiences will love your contribution. Maybe we'll have you do a stand-up act for our closing dinner or something.
That'd be fun. I'd love to do that. Just very quickly, just on the subject of platinum, just following on from what you were saying, Brian, if I may. The supply is so centralized it's not even South Africa, it's one region of South Africa.
Yeah. And,
you just need a natural disaster or power strikes or political problems, and the platinum supply goes. It's got such a central point of failure. And that sort of did happen I think it was about 2006, and the platinum price just immediately rocketed. But palladium is a weird metal because it just sort of does its own thing, completely out of sync with all the other metals. And I remember, this is going all the way back to around 2000, palladium just went absolutely ballistic up when every other metal was just dead in the water. And then palladium kind of came back, and then the bull market for all the other metals took off. And I'm a bit sort of hesitant about fractal patterns, but there's a small part of me that's recognizing that and wondering, if there are parallels between now and 2001, 20 years ago, the beginnings of the great metals bull market, when palladium, went to, this time around, palladium went to $2,500. Now it's fallen to about 1,800. But you wonder if this is some kind of repeat of that.
Yeah, that would be interesting. Of course, that was an historic bull market for commodities in general, copper, base metals, other base metals, precious metals, and the like. The big driver back then was China. And skeptics look back and say, well, Chinese economic growth is only about half of the rate that it was back then. But they forget that China's economy is about 3 times the size now. So it will and can be the driver of a new broader commodity bull market if, things keep along the current paths they have. And we have the supply disruptions across the board, which we are seeing in all the metals. That's a whole nother podcast we can have
I'll say. And there's India as well.
Yeah.
Well,
true.
Dominic, mate, I hope we can get you back on, maybe in the new year. Follow him at Dominic Frisby on Twitter. He also has a YouTube channel. His website is just dominicfrisby.com. Mate, thanks for joining us on the show.
Thanks, Fergus. Thanks, Brian. A real pleasure. And anytime you want me, I'm here.
Cheers.
Great. Thanks, Dominic. Take care.